All right, what's going on, everyone, and welcome to another episode of the Market Misfits podcast. I am your host, Joe Pokshiva, joined by my partner in crime, Smiddy. Smid Dog, how are you doing today, bud?
Doing fantastic. How are you doing?
Good. I said this before we started recording. It feels weird being back in what we'll call our studio here to do this. We haven't done a pod with just you and I in over 2 months, which is was not really the plan, but in reality, what kind of happened is, Smiddy was kind of out doing other stuff, and so was I, kind of gearing up for year end. I had a lot of stuff on my plate. I had a lot of stuff on his plate, and just really didn't have much to really say right at the time too. Like there wasn't much really going on. Obviously, that has changed tremendously here in the last month or so with all the volatility that we had, and we kind of talked and we decided we're going to do a different format going forward for these episodes. We want to do them more frequently. We'll see if that actually happens. But the idea is, a weekly or every other week, like we were trying to do, but I think more so weekly, shorter version of the podcast, unless we're bringing on a guest and chatting with them like Jay, Ranch, or other people, and just really focusing on what we look at. Right? Like what I look at intraday and trying to just give color from our experience and what for the lack of a better term, specialize in inside the steam room or the way that we trade, and just giving our read. And then obviously bantering back and forth about the different things that we're seeing. So there might be a little bit more macro, there might be some more things like me where I'm looking at, VIX and term structures and gamma and like the indexes. And then obviously going through the same stuff we always do, like stuff that Jem says, McElligott notes, the stuff that I like to look at and I can add color to, and hopefully that provides value to everybody. But realistically, it's like we just wanted to take the broader picture and, bring it into this versus me and him just bullshitting for an hour and a half. And despite that might happen anyway, right? Like there's really no holds barred when we do this. So that's kind of the update here on the pod and what we're going to try to do going forward. And I'm going to bring topics, and we'll, just kind of go from there. But before we get started, I do want to let you guys know that the STEAMROOM, is running an education sale right now. It's 30% off and 1 month free of the Steam Room. Or if you buy the master course, you get 4 months free of the Steam Room and a grandfathered in cheaper monthly rate. Me and Smiddy are both products of the master course. We're both products of the educational courses that we had, that have allowed us to gain a lot of knowledge amongst, other things to be able to do this full time, right? I'm a full-time trader. Smitty's a full-time trader with a book. And, the master course is something that we both took that provided a tremendous value to us. That's the only reason that I am sitting here doing this right now. So if you guys are interested, go to SteamRoomTrading.com. The coupon code is SAVE250 and check it out. All right, Smid, now that I'm done with my monologue, I'm going to hop into what I wanted to talk about today. So before we go to like where we're at and where we're going, because we haven't talked in a while, I wanted to talk about something very specific that kind of happened a couple weeks ago, because I think it shocked a lot of people. I mean, it shocked the shit out of me. I'm pretty sure it shocked you, right? But that was our 2% up gap day, followed by that being 2% down on the day. So we had like pretty much a 4% swing on the indexes. So we're talking about what happened on the November 20th into the 21st. And, the stuff I like to talk about with gamma and all of that played a tremendous role in all of it. So I kind of wanted to just touch on it because it's interesting, right? At least to me. But you remember that day, right? You had everybody tweaking out.
Chaos.
Completely tweaking. So I remember I started the day off on the 20th and McElligott came out with a note that morning before. And it was like, all is well. We got this was post NVIDIA earnings, I believe, right? NVIDIA earnings was the day before, if I'm not mistaken.
Yeah, I'm pretty sure that was the Wednesday prior, right? Because we were
am I right?
Because it looked initially like NVIDIA had saved the day, stick save, and then not so much.
Yeah, I'm going back. Let's see. NVIDIA had earnings, the 19th, right? And then we had that gap.
Thursday was, massive gap up, and then it was just pandemonium post.
Yeah. So I remember this now as we stare at Smitty's chest. For those that most people will probably be on audio anyway, but anyways, we had this gap up from NVIDIA earnings. Everyone thought it was, McGillicuddy comes on the note. He goes, yeah, like, we could breathe easy. Like, this is the event we were waiting for. Volatility is going to start coming in, blah, blah, blah. And then chaos erupted. We went straight down with no speed bumps, no stopping, and just pure chaos mode, spiraled out of control. And, luckily I subscribe to somebody that has access to McGillicuddy via the Bloomberg terminal. And he hit up McGillicuddy and goes, what the fuck just happened? And McGillicuddy's response was, I have no idea. I have no idea. He's one of the smartest guys that, in my opinion, that I have so much respect for. It's like, I don't have a damn clue what the catalyst was.
And a smart response in the moment, too. Sometimes the I don't know is the best thing you can say, where it's like, hey, looking for the why doesn't matter at that point.
Right. And you had everybody on FinTwit calling this or this thing. And this was my whole take on it. I was like, okay, I don't know why this happened, but I could talk about like the speed of why things did play out. So, I'm going to talk a little bit here about gamma. This will be a regular thing that I'll talk about. So I'm going to give a brief explanation for those that don't understand what it is. But gamma is basically the rate of change of delta on an options. The way I describe this is from a dealer's perspective or a dealer book. There's a lot of value into that. A lot of people think it's bullshit, but it's not. If you actually have legitimate signed SIBO data, there's a lot of information you could take from it. And one of the things that we were in at that time was we were in a negative gamma environment. So for those that understand what gamma actually is, positive versus negative, I try to tell everyone, okay, think of you being a person on a field basically. And as in you're basically spot price. And as you're running into positive gamma is like a mountaintop or a hill. And as you run up a hill, things get harder, things get slower. Dealers are now trading against you. They're hedging against you. So things slow down, right? So you get this quench of volatility. The exact opposite happens on the negative side. On negative gamma, it's like you're running down a hill, right? And once you start running, that speed just keeps picking up and keeps going. And it's very easy to kind of free fall down there, where one little stumble can turn into you rolling down a hill and it could just be utter chaos. So that's the easiest way to visualize it between positive and negative. So that's what we were in. We were in a negative gamma environment on the index. We're in a negative gamma environment on vol products. We had what McGillicuddy call synthetic negative gamma on all the levered ETFs. So what basically happened is you had a catalyst, the selling came in, and then it just dumped. And then you throw in another piece that I haven't talked about too much in the room, but in general, where we are in a high Vanna environment, which is the change of delta as it relates to implied volatility. So if you think about all of this, right, the storm that we had, negative gamma across the board on pretty much everything. And then you get the high Vanna environment where now the delta's changing even crazier as the VIX just pops and runs and volatility's going crazy. There's no stopping it, right? That's a snowball effect. So I can't tell you what the catalyst is. All I can tell you is as soon as I started going, I'm like, this is different. And I was telling, don't bounce it. Just ride the wave. This is chaos. Right. Just basically just get short. And a lot of people couldn't, right? Because they're so emotional. You're like, there's no way. We're up 2%. NVIDIA saved the day. Everyone's confused. And I'm like, yeah, but the environment dictates how you trade this. Get the fuck out. Just if you're got a long thing going and you can't hedge this, right? Or whatever it is, I'm like, you just gotta get the fuck out of the way. Or to your, what we were talking about, buy puts, hedge it, whatever it is. So it's just a completely chaotic environment, and a lot of people got emotional. A lot of people got burnt. I know people too that run books. They're like, yeah, I was swing long on so much shit, and we just thought we got the Dave saved, we're good, and then this just goes, and we're like, okay, I don't know what to do. Okay, I don't know what to do. People froze, right? Fuck, because we've been conditioned to buy the dip, but when you get into an environment like this, and that's why what I preach is understanding the environment you're in. You have to realize that the chaos factor can just exponentially increase if it goes against you. Again, price action dictates everything. But we also had low liquidity on futures. I think top of book depth at that time was 1%.
Right.
I think is what you told me, right? 1%.
Yes, the worst it's been in a long time.
So this is basically your perfect pot of chaos, right? And it's high Vanna, negative gamma across the board, levered ETFs that all have to adjust as the time goes on. Plus, you have low liquidity on futures. So if they have to hedge with the futures and there is no futures liquidity, away we go. The tumble just continues. And the thing is if buyers were to come in and try to stop it or stuff it, which they did at times, that's fine. But there has to be enough to offset all of this other stuff. Because the one piece of this that I had said, and everyone kind of knows if you pay attention to it, is gamma's not really a directional thing. It just tells you the environment you're in, the speed of things. So at the same time that we're going down, they could have easily flipped this and ripped us higher and reversed it. And that's where the price action comes in. There wasn't a fucking bid to be seen. Like you could see it on the tape on a lot of names. There wasn't a bid to be seen.
Right. And on that note, do you know, and I believe I'm correct here, so everyone fact check me on this in the post, but I'm pretty sure that most of our CTA trend follower friends were also selling into this event. So you have this, you have this headwind coming in where these guys in every tape are selling either 5 to 40 billion worth of securities. Like you're kind of, the dealers are in the right position, and those guys actually capitalized. Most of us got whipsawed. And we internally, we talked about this with the new product, especially. We have, 0-day room, which again, Joe, you're happy or welcome to plug that as you need to. But, we've got guys who are trading intraday and specifically looking for scalp signal. And it's kind of tough out there. When these ranges have gone from what we were used to in a 1-minute candle from, let's say 10 to 15 points to now we're talking 50 to 70 points in a 1-minute NASDAQ candle, this is at least for me, this has been one of the more chaotic seasons of my career, I will say. Yeah. It's been tough.
Yeah, I think it's been tough for a lot of people. Like, me, I like the volatility, you know that. And even now I'm like, holy fuck. Like, this is chaotic. Like, and again, it always, the volatility always brings some type of trade into the picture. Like, especially if you don't like this, like if you're not a short side trader and you don't want to be a part of this, like, my whole thing going into a lot of these events when everybody was like, we're going to all-time highs, I'm like, I wouldn't do shit. I think based off the structure of everything and what we're doing and all this short-term VIX stuff that we have, I'm like, I would just wait. You got to wait for all this to settle out. And it might take a week, might take 2 weeks, might take months. It might take 3 days. We don't know. Yeah. And whatever this episode is, just be patient, right? The patient side. The interesting part, and the reason that I bring this up more so, because I know it's like, I guess, old news. I want to stress to everyone the importance of understanding the environment you're in when you're trading, right? If you can, like, for a lot of people that call some of this stuff bullshit, or they're not interested in it, or they want to come up with anything, like, the only thing you have to understand with all this is just the environment and the speed of which things can happen. That way you're a little less caught off guard if it does go down. Like when I was watching this, I'm like, if I don't see someone step up, this is just going to get exponentially worse. Did I think personally, Smid, that we're going to go down 2%? No, I thought we'd retrace the gap before we got any type of bounce, and we did. There still was no bounce, and we didn't get the bounce till kind of later on. Like we basically went in a free fall for about an hour. Free fall of an hour, and like we just kind of downed. Like it just went down. And that's tough, right? Like that's tough for a lot of people to manage. And I remember I was kind of stressing, like, this is the importance of knowing. That's it. If you just take anything from this large, complicated piece, outside of is just understand the environment, and you're in a much better place than most people, because that's determines what you can stomach risk wise. Because even before this event, before Nvidia, you and I were talking about this. Like, vol products were bid. There was a bunch of shit kind of going on. Like we were all over the place. So in the grand scheme of things, though, we didn't go anywhere. And everyone was talking about AI bubble. Oh, we're gonna go down, right? You had CTAs, systematic selling, all this shit. So it's just like, okay, the perfect storm was there. Nvidia might save the day, and big fuck you. And I still don't know what the catalyst was to this day.
Right. You know what makes it so hard too on those days is that you have this initial, everything's fine, right? We found out the day before on Wednesday evening, like, oh, Nvidia's good, the AI is live, we're good. And then you get this kind of, this visceral reaction, an actual huge sell-off. Most of us are so inclined to buy the dip. I know I'd have to go pull up my PA futures account. I know I bought the dip on this day and got smoked out. And it's one of those that, like, we're all so conditioned in that sense that when we see this, first of all, on the up day, imagine the shorts. Who's going to sit there after they had such a good run there on the downside?
Right.
Those guys are going to jump right back in, and they did, and and they were right. But it makes it hard on the long side, where most of us have been like, all right, every pullback like this on good news has been easy to buy. You got paid. it's that was a tough day. That was definitely a tough day. And
Well,
I think this is the new norm. I think that
yes,
a
that's what I
lot
was
of
going to
us, you know,
mention.
2 years ago, the vol regime base was what, 12 to 14.
Yep.
Maybe we're moving into a regime of 16 to 19 being the new norm. And that's going to mean the moves are bigger, right? Which makes sense. As these indices, you know, grow in size, think about the scale of, you know, a 1% move.
Yeah.
It all makes sense. I think
Right.
that I think that the longer you're here at the party, the weirder it seems.
Well,
And I was talking to Chris Cady a little bit earlier, just bantering back and forth on Twitter, and he kind of made mention of that and said, you know, I find myself looking at price action and thinking this is stupid. And you know, my response to that is, I wonder if I'm the stupid because I'm trying to trade it, knowing that, like you said, Joe, if you can look at a regime like this and figure out, hey, vol is high, you know, we're in a negative gamma regime. Maybe I want to step away from the intraday scalps and really look and pick and choose my spots a little wiser. I think that's something that we as traders all can work on. You know, I'm not going to speak for everyone who beat the market by a big margin this year, but it's something I've noticed this year is that, hey, there are days I want to step away. I had 3 days this year I sized up into vol, and it really bit me in the ass on my personal accounts. It was disappointing. And I think that, you know, that's going to be a big lesson I take from this year and going into year's end. I hope that some of you folks are looking at the same thing and saying, hey, what do I want to fix this year going into next?
yeah. Yep. Yeah. It's a good point because I think you're right. I think from anyone that I've talked to that are, you know, again, much smarter than I am, and that they all think that this new vol regime is here to stay and it's going to be sticky for a while. And I agree with them, right? From the people that I learned all of this stuff from, or even some of the market maker people, like, yeah, this is probably what we're going to be stuck in now. It's not like, you know, Katie made a good point when he did the last podcast episode with Charlie. He's like, you kind of got to get rid of the idea of saying, fuck this doesn't make sense, and just realize that you need to adapt, right? You have to adapt to the times. And that could be a couple things. One is take an interest in understanding how the regimes are, or better yet, find someone who can understand the regimes and tell it to you very plainly, right? So that's what I plan on kind of doing through a lot of this, or what I do in the room all day is like, hey, I'm going to give you what we're in. I'm going to give you the interesting levels. I'm going to tell you what I see intraday. I'm going to try to look at the longer term structure and give my opinion on it. You can use it. You can not. You can call me an idiot. You can call me smart. I really don't give a shit. Doesn't matter to me. But if you got chopped up in all this, or you got railroaded the last couple of months, just know it's a function of not understanding this type of stuff, because people got really cocky, right? Fuck me too. Everyone got cocky post Liberation Day because you could have thrown a dart at the board and got paid.
Oh, yeah.
Minus one sector, which is healthcare, which we will not go into. We just won't talk about it, which now has been ripping, right? XLV has been on a fucking tear.
You want to know
which I'm long, by the way. Full disclosure.
Best performing sector of the last month. Joe, you want to take a guess?
Yeah, it's probably healthcare.
Yep, it is indeed healthcare. Gotta love that. You got to love that.
But think about that, right? That's kind of the ultimate lesson here, is we all got complacent because it was that easy. Now it gets a little bit harder, right? And that's okay, right? There's a good chance. There's always a chance we just rip.
Right.
The chance we go down. We don't know.
What was one of the worst performing sectors this year? Healthcare. So it's kind of fitting that, you know, in this crazy, you know, what do people do?
Last rotation.
Crazy moments. So you're going to rotate out to healthcare and be like, hey, we're a little safe here.
Yeah.
You know?
And unwind on tech with all the AI news and people so scared. And again, we'll talk more about some of the macro shit here, I think, that you wanted to talk about. But, you know, just kind of to put a button in some of this, this is why I kind of preach the importance of, like I said, just understanding this and then realizing what you need to do going into next year, right? Whether that's sizing down in this environment, whether it's just being more patient. A lot of people get chopped up and overtraded. And in reality, too, the one thing that I did, short little story here, is when we had that down day, I'm not saying this to be an asshole, because I love him and he's a really good trader. He's been doing this for a long time. But Twitter was doom gloom. Okay. FinTwit was doom gloom. World's gonna fucking end, basically. The market's going to the shitter. Lucci said, I've seen this before. People are just selling everything. We're going into a bear market. and then I got long. And that's not a dickish thing to say. That shows the emotion that everybody had. What I knew was this is a mechanical thing happening, right? There's a dump going on with a lack of futures liquidity that is over exaggerating this. Now people are getting emotional. The emotion is forcing them to sell out of shit. We're going down. There is bound to be a relief rally. Again, I could be wrong, but that was my thesis when I saw the doom and gloom. And what happened? We got him the next day. We had a little bit of a down, and then we popped and got a relief rally, and then it just kind of continued slowly. Right. So it was like the right thing to saying, you know what, I'm going to buy the blood here because now everyone is thinking we're going down. People are going to get trapped. So for me, I'm like, that's my contrarian signal to, and I didn't take size. Like that's the one piece I want to say to this. Didn't have size. I think I was long like a 20 lot of like SPY calls, right? Like nothing wild, just a taster, see what we got going on. Then I was going to add to, and I didn't need to. I never got a chance to really add because it was just like, okay, well, I'm just going to ride this. I got a great cost. And if I'm wrong, I don't care. I'll trade the futures in the intraday.
Got paid. Yeah, got paid. Move on. This tags on to what we were talking about in the room today. And what does the note say that you said you have on the on your screen, right? It's
that was it's something that Jay always says. And what Jay says, if everyone thinks it's going to happen, it probably won't. Right. And I have a shortened version of that written down that I stick right here. Like it just says like, basically says the exact same thing, but with like much less wording because it's simple. Just be like, if you think it won't, like type thing that I always kind of keep here because that's the number one thing Jay has always taught me. And that I've learned from him is like, you don't get a dump when everyone thinks it's coming.
Right.
It doesn't mean that it can't. It's just unlikely.
Right. Which again is, sometimes we look in the room and want to see sweeps that we can exit into. And it's kind of like that, right? When you see the big sweeps coming in, it's nice to have that in your sales, but you almost want to be like, you know what? Maybe it's time for me to get the hell out of here if I was positioned properly for this, which is rare, but when you get it, take advantage.
Yeah, I'm actually where. Oh, it fell. That's why I was like, I'm not gonna lie, you were asking me. I'm like, I have the post-it note up here and I can't find it. And then I just realized it's underneath my speaker. It fell off of my speaker because apparently the glue is probably dried out by now because it's been sitting there for so long. But yeah, like that's something that I'm trying to even working on for next year is just like more little reminders of things, and that's post-it notes. But that's my own thing. Anywho. So that's what I wanted to talk about, like just this type of stuff. It's something that I'm going to talk about more going forward. I need to do a deep dive into some more structural stuff going forward now that, VIX has kind of come down. Now we're sitting at 16.5 here, and vol products, have kind of come off, which is not surprising. Doesn't mean that we can't necessarily go back up, but it did come in quite a bit. And, we've had some interesting price action the last couple of days as we sit closer to, all-time highs, but not quite there yet on the all-time high side. And who knows? Maybe we rip higher, maybe we go lower, maybe we just kind of chop up. Couldn't fucking tell you, but I digress on that point, and we'll be talking about more of this, in future episodes for sure. So Smid,
absolutely. What's up?
What do you want to talk about now? So we got through some of that, but you were bringing up some stuff that you were kind of seeing about what's kind of going on now.
Yeah, exactly.
We've had a look back.
It's a convenient time being the start of the month to kind of recap what happened last month. So your big winners for the month were healthcare, basic materials, and communication, and technology being the big laggard there. So something I'm thinking about going into December, as everyone's talking about the Santa rally, do we have a nice, gap for tech to kind of come back here? And do you want to be in big tech into the year end? Could be an interesting play, something I'm going to keep an eye on. I don't have any big positions right now on that end, but something I'm looking at. The other couple things that I had short-term comp sentiment was, we hit below 10, which is something that we look at the extreme. So we were down,
Yeah. So for those that don't know what that is, Smid, can you just explain what the short-term sentiment composite is?
Yeah, I mean, exactly. It's kind of the, where we want to be at in the market when you're looking at what do we call it? Sub 10 is kind of your optimal buy for a bounce. And then when we get about above, I mean, it looks 70 to 80 is when you're really, really overdone. But even to 60 is kind of a point of like, hey, maybe pump the brakes a little bit. We had a huge, and if you have a better explainer, Joe, by all means, hop in here.
No, you got it right. I would say the only thing I would add is say again, the word short term is what I'd emphasize. It's something that could be changed in a 1 or 2 sessions, right? It's not a longer term picture where it's like, oh, I need to buy the blood and get long for leaps. It's like, no, you could get a bounce next week. And now the short term sentiment comp is now mid range, similar to what we look at on the anti-VIX.
Right, exactly. So it's a similar indicator. And I mean, sub 10, you usually get a nice bounce. Those are areas which we got, and we've had a nice little bounce here. However, in a few sessions, we went from sub 10 to 60. So you're back to this almost, I wouldn't say overheated, but it's not necessarily engage in fresh positions territory. So something that was kind of nice to see. We got our nice bounce. This could continue extending. We'll kind of see from there. The next thing was CTA flows, which look pretty bullish over the next month. So, and this was who do we get this from? Don't have who this from, but anyways, so over the next week in a flat tape, we've got buying of 15 billion, up tape 19, and a down tape they're selling about 15. However, over the next month, if we can get a flat to up tape, we have 37 to 60 billion in buying to be done. So, if we get a little bullish wind into year's end, there should be some nice CTA buying to help us. In a down tape, things are going to mean revert pretty quickly to negative gamma. And then Joe's going to be in the driver's seat there because sellers will have 140 billion to offload in the next month. And that could get a little spicy into year's end. It's been a great year. What Qs are up 21% year to date, essentially.
Monster year.
Listen, if we realistically had a pretty big sell into December year's end, first of all, sets up for buying into January. Second of all, we're still going to have a great year in the grand scheme of returns. So I think most people will be walking away outside of our, managers looking for their year-end bonus. Most people walk away happy campers as longs. So those are the big things. One little point that I'd like to throw in here, we're kind of running up at our 30-minute window, and we can stay as long as we need. But Monday on our top bets list, we caught some win. These were June 2026, June 2026 calls at 145. I didn't realize how well Wynn has been doing, Wynn Hotels, that is. However, we also got Goldman Sachs coming through with a conviction list December buy on Wynn. Thought that was an interesting little layover there where we have Goldman coming in and saying, hey, we like Wynn. And we got a big old sweep. Let me check the size of that thing. It was pretty decent size. Let's see, 144,000. So outsized for Wynn nonetheless, but something to keep an eye on. You had Formula One, you got winter gambling. I know some folks out there spending some money this time of year. So should be interesting looking at the casinos and hotels in Vegas going into first quarter of 26.
It's so funny that you're talking about Wynn. Just like I haven't had a casino stock on my list in years, right? In years, right? And you're right. Like Wynn's kind of at the top of this range again, and there's some other people going for it. It's been really interesting to see some of the rotation in these names. Like at one point, you had defensive names catching a bid, like XLP during a lot of this, the consumer defensive names like XLV. Obviously, we talk about healthcare was hot, now it's starting to come in a bit, and then you had home builders, right? Jay was talking about Lennar. And all the homies, they had a fucking rager. Druck bought the shit out of Lennar and DH Horton.
Yep.
So it's, these are names I haven't personally looked at charts for all year. I haven't looked at Lennar all year. I haven't looked at Wynn in years. And that's probably a good thing in reality. It's like you're looking at names that haven't been the hot play because all anyone's talked about lately is quantum and AI. That's been the theme for the year.
And Wynn was just mediocre for years. It was 110 to $90. I mean, even lower, realistically. But this thing just kind of diddle around in this range for 2-3 years. I mean, I look at the gambling sector and think It's so easy to gamble these days, folks. You got Robinhood, you got Kalshi, Polymarket,
Oh
crypto.
yeah, we haven't talked about prediction markets.
You know, I mean, they've made it so easy to get that if you need to get that juice out. I mean, Joe, you and I like to go throw dice. Everybody knows.
Yeah,
all the
of
folks
course.
in the room know. We want to go to Vegas, lick some dice,
Throw
it on
dice,
the craps
baby.
table, see what happens. For those of you who don't know, I got very sick at the last traders conference we all went to, and I blame the craps table. However, that's the bare thesis, right? Is you don't have to go to Vegas to gamble anymore. That was the spot. It was the entertainment capital. Well,
No, you don't need to go anywhere. I can do it from my couch.
Go to Miami. Right. Well, exactly. And depending on what you want, right? Like there's too many other places in the country to go to have a good time in addition to being able to gamble a little bit. I feel like Vegas had that. You go there to gamble and there's all these other amenities. Now people are looking at, hey, where do I have the amenities if you need to gamble?
Yeah.
Some people
Vegas
don't,
just got really expensive.
Don't actually have that itch. Oh, I've heard some.
Vegas got really expensive, which was the other piece to all of this, where it just became like they almost priced out the average consumer. I mean, don't get me wrong, I know they still have. I don't know what don't quote me on this. I have no idea what the tourism rates are right now for them, but that was always my concern and why I've looked at much more of like, okay, the DraftKings of the world and all of them. Like I'm big on Kalshi and Polymarket and the prediction markets because it's CFTC, so it's legal only in 50 states, right? Unless they get fucking sued out the ass and have to do anything. But if all these big companies just go on that, you could do degenerate shit and gamble all the time from your couch or anywhere versus having to go to Vegas, which is why it's so surprising to me. Like if I look at Win, like I just pulled this chart up. The low, Liberation Day lows was $65. It's trading at 133. It's been straight up, and it still hasn't. That's gnarly.
And they're buying the 145s. That's why I find it crazy because I'm like, oh man, I traded this last, I think 102 to like 107. But that was
not my cup of tea these days.
Year, I think. Right, exactly. And that's, we'll see. We'll see. Yeah. My client was just out there. I'll talk to him. He was over there for Thanksgiving. We'll see what it was like, man. He's a pretty good gauge of that kind of stuff. He does a lot of that, running about the world, gambling at the big events, Barrett Jackson and whatnot. So it's always fun to hear his perspective on what the buyers are like and what the, in this case, gamblers, but buyers nonetheless, kind of what it was like there. So,
yeah, I'll be curious when you get back to, tell me how it was. I mean, I want to make another trip out to Vegas, like ASAP. I had my other buddy. He's like, yeah, let's go. I'm like, dude, we should go when they do the U.S. World Cup. It's not going to be in Vegas, but we should go to Vegas to bet on the games, watch. It's also the same time as the Stanley Cup final. So I'm like, dude, this could be a killer time. We can go fuck around on the strip, go to Fremont again and fuck around on the Fremont strip. So we should put together. I know Ron would be down. I know you'd be down.
Oh, yeah.
Got to get a whole crew. That'd be such a fun time. But the other thing too, I wanted to point out as you're kind of talking about names and get your perspective on it is silver and gold. Because I'll be real with you. Shout out my boy TP in the room. I've been long silver all year. Right. So this is one of my this is a longer trade. So I don't consider these equity plays that I do like trades per se, because I'm going to hold them for a lot longer. But I've been long silver all year. So, we're talking like average cost somewhere in like $26, $27 range. Now we're up on SLV and it's up to $53.
Yeah.
Right. And then even gold, I've had a decent long, but not as much as I have on the silver side. But you're the gold guy. You have the inside track. What's your take on some of this price action you've seen in the gold and silver?
So gold, I had gold charted in front of me, honestly, and we were watching that, right? I don't want to tilt this down again, but we were watching gold. You played gold, you nailed it. I scalped it, did okay. I think it looks good. From what I hear from our guys, they're not selling gold, people are buying gold, right? So when they're doing outbound calls, people are like, yeah, you know what? I actually do need a few ounces of gold. We're still seeing that retail side, people are eating it up. I think central banks are still buying. And at this rate, we've got Tether buying, right? When stablecoin companies are turning around and, turning digital money to hard assets, they're buying gold and T-bills. I think we're bullish, man. I think we're heading towards 5,000, if not more. I don't want to put a duration on that and say, oh, my year-end target for 26 is 5,200, but I think gold keeps going. I don't think we're out of the neck of the woods there. This will be a bigger conversation and something that maybe we'll do a segmented podcast on to talk about.
Yeah.
Government debt and how that ties into physical markets.
You want to talk about bonds?
All the fun things. Yeah, we might have to do like we'll do a little macro podcast where I can nerd out on some of these things that I spend a lot of time learning about. But, I think there's a bit of concern and caution, when it comes to precious metals. I personally prefer silver. That said, I think to safeguard your gold and silver, you also have to have, you got to have a safe. There's security. There are other aspects of that play into a lot of people's investment thesis there. I think it's more common that people are, safeguarding at home. Similar to crypto, people want to custody their own coin. A lot of people want to have their own gold and silver in their safe. I think that we see a lot of that.
Their own coin in crypto, right. And they want to custody their own gold physically
and silver in their safe. I mean, because that's true wealth, in my opinion, right? The day that you need it and you need to go pull gold coins out of an IRA, good luck on your redemption, because they're going to probably offer you cash. And if cash is not working at that moment, right, the banks are not working, you're kind of in a pickle. Most gold and silver buyers are kind of doomsday. Let me not say doomsday. They are more prepared for, adverse outcomes of government and ruling. I would say at that point, yeah, I mean, you should be buying gold and silver and throw it in the safe. I think price goes higher. I think silver has a choke point because of the actual, the commodity aspect, wherein we're going to use this as an industrial metal for electronics. That never goes away, right? That only gets worse. And I think that could be, again, gold is a superconductive metal as well. That could be problematic, where people are like, hey, do we want to build more supercomputers so we can do AI? Or do you want to make jewelry and you want a Rolex? At a certain point, like, we're going to be using this material for very, very different outcomes. That's going to be interesting to see it play out in the next, that's our 5 to 10 year play out of gold and silver.
I was listening to a different podcast that I think that you put me on. I don't know if it was Macro Voice or something else, but it was one of the podcasts that you were telling me about, and someone brought up gold pricing. And this is why I wanted to ask, because I believe, and I don't want to get quoted on this, but I could have swore, if I remember correctly, they were talking about gold being worth $10,000 an ounce, like in the next 5 to 7 years. Yeah, that's nuts. Like, that's a double.
Being around a lot of gold folks, that has been the conversation for a long time. That said, when gold was trading 2,200, my client said to me, "Oh yeah, gold's worth 5 to 10,000 an ounce." And this is a guy who competes with, Peter Schiff, right? And they know each other, etc. And Peter Schiff has been saying the same thing since probably the 1980s. They were kind of right. But
so okay, hold on, I'll put you on the spot. Knowing what you know, do you think that gold hits $10,000 an ounce? And this is not a buy recommendation by any stretch, guys, just putting it out there. But do you think by, let's say, 2030, so 4 years, you think gold's $10,000 an ounce?
Yeah, I would say gold 10,000 an ounce, and I would honestly say, controversial, Bitcoin's going to be 250 to $500,000.
Oh boy!
And I do not think that this is. I mean, I think that it is how should I put this? I'm an Austrian economist at heart, right? I don't believe in the Keynesian methods. Monetary theory cannot and will not work. But we're going to find out. And I think in the find out process is when things really get wacky, right? It's not necessarily about gold and Bitcoin appreciating as much as I do think the counterpart, the dollar, is depreciating, right? They're going to continue printing. The Fed just injected another, I want to say it was 13 billions in reverse repo overnight. That was last night. So they're pumping liquidity back in the market. What happens when we do this? We're going to inflate prices. That goes, that trickles down, whether it's prices of stocks, groceries, gasoline, you name it, prices go higher, our dollars buy less. We live in a bit of a Ponzi scheme. It's not doom or gloom. You just have to understand the game you're playing. It's kind of like a volatility regime. You're in it.
Yep.
You got to figure out how to navigate this shit.
I think that'll actually be something. So like to kind of put a button in all this too, like what we're going to do with the future episodes of the pods is like sometimes we're going to talk about what's going on in the markets, like in our reads as we talk about, just because it's fun for us. Like this is what we banter about anyway, might as well record it. Or sometimes it might be about specific things. And I know one of the things that I wanted to talk about with you, and we'll probably do this on the next episode, is to talk about liquidity, right? Because it's a big theme right now that Jay talks about. To talk about all of that, there's some interesting US dollar dominance with the stablecoin market that comes into play that I found really interesting, that I think people might be interested in too, and get into a little bit more of some of the macro stuff and just, kind of talk about it. Because again, that stuff plays off on a much larger time frame than what we do intraday when we trade. But I like the idea of having a mix, and that's what we'll do. Like you and I, we've made the decision now with this that doesn't have to be specific to one thing. We're just going to talk about what we have passion on, and if people like it, that's great. And if they don't, who gives a shit? And keep them shorter and more focused on what we actually want to talk about. So I think that is a good note for us to kind of end this episode, even though it's the first one back, and I feel like we could go for probably 3 hours at this point. And then we'll kick it back up next week and figure out what other topics we kind of want to talk about. And who knows, maybe next week we'll have VIX sub 12 and the world is we're at SPX 7,500 and Tom Lee is like saying, I told you so. But I doubt it. If I had to make a bet right now, I'd say it's a good time to be owning vol, not selling vol, but I could be wrong. And I have to do some more deep diving into some other stuff to kind of check out that thesis. But anyways, Smiddy, pleasure to be back in the saddle with you and doing this more regularly. And, we'll catch all of you guys on the next one. Peace.
Sounds good. Have a good night.